morning, traders. Happy October 3rd. Take a look on this trade. Shock or not, this trade reached key Fibonacci target reversal zone and it's reversing as expected. This market is testing us to the core. This market remains frozen in correction for days, hours, weeks and months, depends on what instrument you trade. For one reason only. Institutional rally overextended and institutions not doing much except holding positions across the board. Take a look on this trail and this reversal zone on this short. No surprise, what price does every day, every time. This is where a knowledgeable trader exiting position, not entering position. In this challenging markets, knowledge is power. In this challenging markets, knowledgeable trader is not staring at the screen. Knowledgeable traders spending the least amount of time at the screen. Look at this reversal. Anyone surprised? Should not be. It's Fibonacci reversal zone. This is what price does every time. Where in the world did this short come from? From key Fibonacci resistance present in front of you for weeks. This month I celebrate 10 years of work with price action and Fibonacci. This month I celebrate working with students in 50+ countries all over the world. Traders from beginner to hedge fund manager trading the method, from micro forex to stocks, options, futures, commodities, ETFs, from accounts from few $1,000s to 7-8 figure accounts. What you choose to trade, absolutely up to you. Fibonacci levels present in front of you for weeks in a play on 1-minute chart. Let's convert this chart to one and let's take a look what played out the start of October. Shall we? Look at this dance. Shock or not. Happy October 3rd. As we discussed this morning, as long as this Fibonacci support respected, do not short. Monitor for long. As we discussed, if rules are met, take a short. Shock or not. Fibonacci level identified weeks in advance as key Fibonacci resistance, as well knowledgeable trader monitoring for short. If I convert this chart to 5, identical formula will remain. What you choose to trade, absolutely up to you. Market is a stepping stone. Here's 5 in the last 2 weeks. Do you remember that? Do you remember FOMC last week? No surprise. And do you see what's happening in front of you right now? No surprise. It's a reversal zone, ladies and gentlemen. No matter what you trade. This is what price does all the time. 80+% of the time reversing. No surprise. As expected. This is exact same chart on S&P weekly. Do you remember where S&P skyrocketed from? Trend inception. It's exact same identical level as you're seeing on 1-minute chart in front of you. What is the difference? This is your investment decisions. This is your day trading decisions. Identical formula applies. Do you want to be day trader? Choice is yours. Do you want to be position trader? What you choose to trade, absolutely up to you. Exact same formula you see on 1-minute chart on S&P is what's playing out right now on Euro weekly. Shock or not. Poor Euro. Struggling, buyers keep stepping in but cannot break through this resistance. As again, this is key target on Euro. Just like on S&P, where S&P sold off from. This is exact same target on gold, where gold sold off from. Poor gold, trying and trying and trying for months. Fibonacci resistance identified years in advance is a problem. This is your investment decisions. This is your day trading decisions. And there is a trading room open. What you choose to trade absolutely up to you. This is room not for babysitters. This is room for knowledgeable traders who don't like wasting their time, especially in this market conditions. Will buyers pick up this steam? The only thing that's holding the key is this key Fibonacci resistance, the end of the minor trend. You can do so much better, S&P. Rules are met, take a trade. Rules are not meant to not touch this market. It's all the same. This exact same level is a problem on Nasdaq. My goodness, for weeks and weeks and weeks, Nasdaq been frozen in correction for the last 2 months. Key Fibonacci resistance, just like on S&P in front of you right now. It's all the same. 10 years of work with price action and Fibonacci in front of you every day. Buyers are weak on Nasdaq. Buyers are weak on S&P. No need to wait for years and months to see the accuracy of the method. You see it in the trading room every day. Let's take a look what played out on oil this week, shall we? Is that possible? Key Fibonacci support in front of you, not the place to short. We're dealing with extremely bearish news on oil. As we discussed, monitor for short here, not when price comes to reversal zone. Shock or not. If I convert this chart to 1, let's take a look how much oil reminded you that trading on the news is not something you want to do. As buyers stepped in on oil, just like on S&P, as expected. It's all the same formula. This is oil institutional chart. This is a chart I use when I work with hedge funds and institutions. This is a chart I use for my own investment decisions. This is where buyers stepped in on oil in 2016. This is where oil is now at institutional reversal zone. Do not enter into this level. And just to remind you, if I walk down memory lane, shall we? On oil and S&P? To remember oil in 2016 and 29, my goodness, it's trend inception. Rules are met, take a trade. Simple. Don't waste your time. Do not short. And that's where oil is now. At trend exhaustion. It's all the same. Trend inception 2016. No surprise where oil is now. Trend exhaustion. Institutional chart. And this is trend inception on oil 1-minute chart. Despite bearish news. How many points did oil skyrocket already despite bearish news? Many! My goodness, 1 minute after news, oil skyrocketed. 100+ ticks. Do you want to trade on the news or do you want to be a knowledgeable trader using pure price for entry and Fibonacci for exits? This is all that matters. Market is flawless Fibonacci puzzle, no matter what you trade. And if I walk down memory lane on S&P, let me remind you. This is S&P 2016. Do you remember 1800 number on monthly? Do you see 2800 in front of you? Reached 2 years later. What do you have to remember? 1800 was trend inception on weekly. This is all price had to do. Break through key Fibonacci resistance, 2200 number, in order for bullish rally to skyrocket to drastically higher levels, to 2300 and higher. Took S&P 6 months to break through this level. Let's take a look on S&P now. And what is it doing at the end of the minor trend? Anyone surprised? It's the exact same formula. That's a problem on S&P now. And that's your day trading chart this week. That was the problem on FOMC last week. No surprise. This was key Fibonacci support this morning. This is ultimate Fibonacci target on S&P, as always is decision point 2. No matter what chart you trade, if I convert this chart to hourly, it's all the same. That's 2300 number you saw on weekly on S&P. It's all the same price action patterns, no matter what you trade. S&P 1-minute chart collapsing through the end of the minor trend, not breaking through. And this is what weekly had done. 6 months of pain and torture at 2200 number. 2300 is reached next following year when price skyrocketed until reversal zone. Absolutely no surprise where price collapsed from at the start of 2018, and as we discussed in the course the entire year, as long as this Fibonacci support respected, institutional bias will continue bullish. It's all the same. The only difference, this is your investment decisions. This is your day trading decisions. What you choose to trade, absolutely up to you. Here's another example, and the reason why hedge fund managers taking the course. Here is Apple. Do you remember Apple at 91? It was key support. Do not short. As I said, if this support is respected, Apple will continue higher. That's S&P next. This is key support. Do not short. This is key resistance. Do not buy. And this is Apple now. It's all the same formula this year. Bullish rally from 91 reached key Fibonacci resistance at 181. 2018, 3 years later. Where is the price right now? Respecting key Fibonacci support, Apple in correction. Expect pain on Apple here. It's all the same. Key Fibonacci support was respected in June this year. Will it be respected on S&P as it's been respected since early this morning? As key Fibonacci resistance at 181, not the place to buy. The place to buy is here at trend inception. Just like oil, just like S&P, just like Euro. Shock or not, it's all the same. Just like bonds, not breaking through. No reason to wait for weeks, months and years to see the accuracy of the method. You see it in front of you every day. Market is flawless Fibonacci puzzle. Stop chasing indicators. Stop wasting your time. Master rule-based method that traded by traders in US and globally since 2011. New class starts this Monday, October 8th. Please review all the information on the website and never hesitate to contact me 925-257-4298 or info@fibainstitute.com. Group classes 8 weeks, private mentoring 16. Pretty please speak with me. First, if you're considering signing up for private mentoring. Group classes included in private mentoring. Never cease to amaze me how easy a complete beginner traders mastering the method. If Pablo can do it, so can anyone. Listen to the graduates. This is the key. As you will find someone just like you, who trades the instrument you trade, using exact same Fibonacci tool, using exact same Fibonacci levels, from beginner trader Pablo to hedge fund manager Joseph, trading the method in US and globally. Choice is yours, what you want to trade. It's all the same. The only difference, risk management and trader psychology. Fibonacci levels remain the same. What you choose to trade, absolutely up to you. The only formula remains: buy low, sell high. When price comes to decision point 2, never enter, exit the position, no matter what you trade. When price comes to decision point 1, never enter, exit the position. Trade from Fibonacci levels, never into Fibonacci levels, no matter what you trade. And that's what you're seeing in the trading room every single day. Buyers becoming weaker on S&P, meaningless pullbacks at reversal zone. What is the smartest thing to do? Be on sideline, market in correction. Sellers exhausted and buyers are weak. Just like on bonds, just like on euro, it's all the same. Stop wasting your time chasing indicators. Join us in the course and master what indicators developed after. It is that simple. Trade with knowledge, trade with power.